Most advisors spend their first few years obsessed with getting new clients, but the real money, the real stability, it comes from clients you already have. So in this lesson, I'm going to show you how to build simple retention systems so clients come back to you automatically when it's time to remortgage, move, or review protection. So why does retention matter so much? Well, think of your business like a leaky bucket. If clients keep dripping out the bottom, you'll always need to pour more leads into the top. But retention, it plugs the leaks. It's what turns a one-off case into a 20-year client relationship and often into multiple referrals along the way. So you need to adopt a client journey mindset. Your client journey shouldn't end at completion. It should look like something like this. On completion, you do a moving day check-in. 1 month in, quick follow-up to see how they're settling in. 6 months in, some form of touch point like an email, a call, or even a WhatsApp message to check in and see how they're getting on. And then on an annual review protection and long-term goals every single year. This can be done just via an email or a WhatsApp. It can even be a phone call. Now, remortgaging and product transferring is going to be every 2 to 5 years. So depending on their deal, the goal is to stay present in their lives without being pushy until they need you again. So here are some retention tools that you can set up yourself. So you can do CRM reminders. So you want to schedule annual reviews and remortgage alerts on any of your CRMs that you use, or maybe even on something basic like a Microsoft To Do or some sort of reminder app. WhatsApp check-ins or message check-ins is great. It's very quick, it's very personal, and it's easy. Moving day cards or gifts, small gestures, they go a long way as well. And then email newsletters, so monthly or quarterly updates with tips, not just salesy stuff. And it doesn't need to be complicated. It just needs to be consistent. Now, here is the exciting part of this. The longer you stay in the game, the more it's going to compound. Year 1, you'll only have new business. Year 2, you'll have new business plus some little remortgages that are starting to drip in, maybe, but not most likely. Year 3, though, your pipeline is a mix of new clients and remortgages as well as referrals. And suddenly you have stability most advisors will never reach. So your task and your exercise for this is on a blank page, write the heading 12-month client retention plan. And under it, write 4 touch points that you'll commit to for every client in the first year. For example, completion day card, 1-month check-in, 6-month email or call, and an annual review. This simple system will keep you front of mind, so when it's time to remortgage, you're the only person they think of. In the next lesson, we're going to wrap this module up by looking at planning for the future, how to scale from surviving year 1 to building a thriving lifestyle business.